Today on Inspired Money.
It's easy to say the banks, haven't done enough, but I can tell you, as someone who's been watching the legislation and the guidance, they're dealing with hour-by-hour changes. So they get guidance on Thursday night, and they're supposed to open up the applications on Friday. And then the demand has been like nothing that any financial institution has seen.
This is episode 138 with credit expert and education director for NAV, Gerri Detweiler. Welcome to Inspired Money. My name is Andy Wong, a managing partner at Runnymede Capital Management. Each week, we bring you an interesting person to help you get inspired, shift your perspectives on money, and achieve incredible things. From making it to giving it away, Inspired Money means making a difference, creating something bigger than oneself, and maybe, just maybe, making the world a better place. Thank you for joining me. Hey, Inspired Moneymaker, welcome back. If this is your first time listening, welcome. Today's episode is targeted to small business owners with fewer than 500 employees because we're going to talk about Small Business Administration emergency loan programs. I know that the Payroll Protection Program, or PPP, and the Economic Injury Disaster Loan, or EIDL or EIDL, have run out of money. But I wanted to get Gerri Detweiler on the show today to talk about these programs and how to prepare for the expected next round of stimulus. If you're not a business owner, you might want to skip to the Inspired Money tip of the week because the CARES Act includes changes to emergency withdrawals from your retirement plan, and we'll also talk about required minimum distribution waivers. I ask you to please share this episode with a business owner that you know. This might be your favorite neighborhood restaurant owner or a friend who owns a local boutique. Maybe it's your dentist, hairstylist, or yoga studio. It's obviously a really tough environment for small businesses right now. Many have seen revenues go from healthy to zero overnight. Today's guest is a nationally recognized financing and credit expert with over 20 years experience. She's been interviewed in more than 3,500 news stories and has answered over 10,000 credit questions online. She's the author or co-author of 5 books, including Finance Your Own Business, Get on the Financing Fast Track. She works at NAV, a company that helps small business owners manage their business credit and get streamlined access to financing. So what are we going to talk about today? In this episode, you'll get an overview of the Coronavirus Aid, Relief, and Economic Security Act, or CARES Act, the PPP and EIDL loan programs, what you should be doing to prepare for a possible next round of small business stimulus, and we'll review additional programs that you might explore. Now let's get inspired with Gerri Detweiler. Gerri, welcome to Inspired Money. I'm so excited to have you on the show.
Oh, thank you so much for having me, Andy. I appreciate it.
Gerri, you are education director at NAV. I noticed that on your website, you have a SBA COVID loan application, but NAV is not a bank. Tell us about what NAV does.
Yeah, so NAV is a marketplace. So this is what we've been doing since we were founded. We've been helping small business owners get matched to lending options based on their qualifications as well as what the lender is looking for. A lot of people compare us to like Credit Karma, but for small business. And, it's really interesting right now because I've been education director there for almost 5 years. And in so many presentations, I have talked to small business owners about the need to take certain steps so that if there is an opportunity or a crisis that comes along, their business is prepared, and knowing their numbers is one of those, and lining up financing before you need it is another thing that I've talked about. And now, of course, it's just come full force that every business owner that I've spoken to is looking for options to help get through this really tough time period.
Yeah, I saw on the website, it looks like you guys work with over 500,000 customers. You definitely understand the tough time that small businesses are going through right now, especially when it comes to cash flow. I mean, it's very unusual that businesses are suddenly not able to open, not just countrywide, but globally.
Yes, and industry-wide too. And we do, by the way, we have over 1.5 million small business owners on our platform. But yes, Andy, there are certain industries where funding is just not considered terribly difficult. You're a veterinarian, you're a dentist, something like that, where I know many veterinarians are trying to stay open and maybe get the pets from the car as opposed to letting people come into their facility. But most dentist offices are closed. They're just closed. They might see emergency patients, but that's an industry where you would normally say, "Hey, you want a loan? Sure, we're easy to match you to a lender." And now, of course, that's closed. So we're seeing such a variety of businesses that just didn't think they would have to look for help in the form of a loan or any of these funding programs that are available, but are quickly realizing that if they don't do something, they will not be able to stay in business.
So for context, let's go back and talk a little bit about the CARES Act that was passed at the end of March. Like, what does that mean for small business owners?
Yeah, and we should probably actually rewind just a few weeks before that, because a few weeks before the CARES Act is the law that the president signed on March 27th that includes all kinds of provisions, all the way from your stimulus checks that you get from the IRS, or your expanded unemployment, some payroll tax credits for business owners that have had to lay off employees. There's a variety of provisions in that bill, but the two that have been of interest to the small business owners that I'm writing for are the grants under the Economic Injury Disaster Loan Program. So those are EIDLs, is the way I'm calling them, EIDL. And then the other is the Paycheck Protection Program loans, or PPP loans. Now, the disaster loans had been around before. That program's been around for years, and it serves businesses in times of physical disasters like hurricanes, tornadoes, floods, etc. But there is also a component that's been around for years called the Economic Injury Disaster Loan. And when we saw businesses having to lay off employees and shut their operations because of stay-in-place orders and things like that in March, the SBA administrator announced that they were making that program available very quickly to all 50 states. So that's a loan program. It's a loan program that is designed to be a low-interest loan for working capital to help the business get through the disaster. So that's the traditional disaster loan. You don't apply for a certain amount, but you provide information about your revenues and your cost of goods sold, and then the SBA will determine how much you qualify for, and the goal is to help your business pay its bills so it can reopen when the disaster has passed.
Interesting. I didn't realize that you were not specifying an amount.
Correct. You're not saying how much you want, which is very confusing for the business owner. It's also very confusing for many businesses to put in their COGS, because that's not something they're familiar with, or they don't really calculate it. A small service business, for example, might not even really know how to calculate that. But the CARES Act is the one that then added up to $10,000 emergency grant. So the idea was, we've got all these businesses that need money fast. We're going to give them up to $10,000 in the 3 days after they apply. And then they will continue to be considered for the EIDL, the Economic Injury Disaster Loan, for a larger amount, up to $2 million. And hopefully that will provide some assistance while we also start to build up this PPP program. So what happened was, very quickly, the system became overwhelmed, because these disaster loans only go through the SBA. That's the only type of SBA loan, for the most part, that really comes from the SBA. For the most part, most SBA loans are made by banks, and then the SBA just guarantees it up to a certain percentage. Well, the idea, you have to go directly to the SBA. Their systems became overwhelmed pretty quickly, and we did not see anyone get money in 3 days, but we did start to see those advances coming through the past couple of days. Now, it's set up to $10,000, so a lot of people thought they were going to get $10,000, but the SBA determined, because of the limited funds available in this program and the number of applicants, they decided it would be $1,000 per employee. So if you're a solopreneur, you get $1,000. If you're an employer with 10 employees, you get $10,000. So that program has currently shut down to new applications because there's not enough funds to fund additional applications. So we're hoping they're going to reauthorize more funding for it. It's a pretty important program, Andy, because it gets at working capital. And when we talk about PPP, that's mostly payroll. So I'll hear from business owners who maybe can qualify for both, but a business owner who has very high rent expenses, for example, but not that much payroll, they wouldn't benefit as much under PPP as they would under EIDL because their working capital needs are greater. So both programs together are pretty important. So we hope more funding will be coming.
Now, that $1,000 per employee up to $10,000, you call that a grant, but that's not forgivable, right? The business owner is just getting that money quicker?
It actually is a grant. You don't have to repay it. And here's the nice thing. Even if you get turned down for it, you don't have to repay it. So even if you get turned down for an EIDL loan, you don't have to repay the grant. Now, you are supposed to use it for specific purposes. You can't just use it however you want. You can't double dip. If you want to use that money for payroll, you can't also use PPP for payroll for the similar, purpose. But for the most part, we're seeing the smaller amounts are starting to come out, and it's really designed again for working capital needs for businesses.
Got it. But it is closed to new applications. So business owners, what should they be doing in terms of monitoring the status of EIDL loans?
It's tricky because when you fill out the application, there used to be a portal where you could actually check the status of your application, but that portal quickly became overwhelmed and it ended up with some data problems. It was business owners who were applying were seeing the personal data of other businesses who applied for it in the portal. So they shut that portal down. They created a new streamlined portal. And in the streamlined portal, you don't add as much information. You don't have to upload tax returns or anything like that at that point. But you also can't check your status through it. So you have an application number that you're given at the end. And that's what you use if you do want to call the SBA and try to find out where you are. They're so overwhelmed. I understand why business owners want some certainty. I'm not sure that you're going to get a whole lot of helpful information at that point. But if you definitely want to make sure that your application is in the queue, then I would say that's fine. But it is first come, first serve is what the SBA says. So they're going to be working through the backlog of applications first. So if you applied more recently, you may or may not get funding. We just don't know.
With the SBA, do they operate with regional local offices?
The SBA does have regional offices, but I'm not sure how they're processing the EIDLs in terms of the regional offices. So that's a great question. They probably are going through regional offices, and I'm not sure how that works in terms of who gets first priority or how that queue works. But you do have regional offices and what they're doing for a lot of business owners is putting on online events, or some are having office hours where you can call and ask questions. So those can be helpful from just a standpoint of understanding what resources might be out there for you.
Great. And then by my memory, I think that for for-profit businesses, was it a 3.75% interest rate loan and then 2.75 for nonprofits?
Yes, you have an excellent memory. That's exactly right. So, and the repayment term can be up to 30 years. So it's a pretty attractive loan. Now, one thing I will say for anybody who has an application pending or who has gotten one of these loans, one thing you want to understand is that there is collateral after $25,000 in the loan. So if you get a loan above $25,000, you will have to pledge collateral, which could include your home equity. So just be aware of that. Now, one thing you can do is if, let's say you applied for EIDL and you applied for PPP, and now you haven't, maybe you got the advance, but you're still waiting on your loan. And then in the meantime, you find out you're going to get money through PPP. You can say, I don't want either the full amount you're offering me, or I don't want the loan at all. If you just wanted the advance, the grant that doesn't have to be repaid. So you do have that option to say no to more money.
So should we move on to PPP? Because I think this is the even bigger program.
Yes. So PPP is a program that's under the SBA's umbrella still, under what's called the 7A program, which is the main program that most business owners who get SBA loans get. I keep reminding business owners that the name of this program is the Paycheck Protection Program, not the Save Your Business Program. It's not for all business needs. It's really very focused on helping small businesses retain workers, and that could be including themselves for 8 weeks. So the way it works is you apply for PPP through a participating lender, and there are about, I think, almost 5,000 different lenders now that are out there. And you are basing your loan amount on 2.5 times your average monthly revenue. So there's a formula you go through. If you're a seasonal business, you can use a different formula, and that's where our PPP calculator comes into play that we have on NAB. We launched that actually. The CARES Act passed on Friday, and we actually launched the calculator on Monday. So we very quickly tried to get this information to business owners. But you are getting 2.5 times your payroll, and then what you're supposed to do is spend that money on approved purposes, which is largely spending it on payroll. So you're going to pretty much get this money, spend it mostly on payroll. It's 2.5 times monthly, and you're going for 8 weeks. So it's like you're getting that little 0.5% there that you could use toward rent, toward mortgage interest, toward utilities for your business. And then if you do it all right, then you get that money, you can apply to the lender and have it forgiven. And since there's no payments for the first 6 months, you could apply for PPP, get the funds, keep paying that payroll and a few other expenses, apply for forgiveness, and never have made a single payment on the loan. So that's where it becomes almost like a grant from the government, in that they're going to basically pick up that cost for you.
Yes, it sounds like a great program. It was welcome with great anticipation. And I think that the key words that you said, if you get the money, in the last couple of days, the news has come out that the $350 billion that had been allocated for this program have been used up. I just know that small regional banks looked to be much more successful in processing loan applications and getting them to the SBA and getting those loans funded versus some of the big banks early on. What did you see?
We had 95,000 people, I think, at this point use the calculator. And then we also have a Facebook group dedicated to this topic. We get phone calls every single day to our lending team about this program. So we have heard a lot of questions from small business owners. And it's easy to say the banks, haven't done enough. But I can tell you, as someone who's been watching the legislation and the guidance, they're dealing with hour-by-hour changes. So they get guidance on Thursday night, and they're supposed to open up the applications on Friday. And then the demand has been like nothing that any financial institution has seen. And so they just stated, the SBA just stated they did in 14 days, they did 14 years worth of SBA loans under this program. So it has felt hit or miss to the borrowers, and I understand that completely. But at the same time, the banks have had to make some very quick on-the-fly adjustments to try to accommodate these applications for a program that isn't completely clear on a number of angles. And I'll just point out one real quick. That is the self-employed applicant. When Treasury announced the program, they said that businesses can apply on April 3rd, and then it was the self-employed could apply on April 10th. Well, April 10th was Good Friday, came and went, and the guidance for the self-employed application didn't come out till, I think, Tuesday of the following week. And so in the meantime, all these folks who wanted to apply, who were self-employed, were trying to figure out how to do that. And then, of course, by Thursday, the funds are allocated. So, they didn't get much time to try to get in that queue. So it's been lending on steroids, no question about it.
Yes. And then among all this small business loan confusion, now we're starting to see stories where larger companies have figured out ways to apply and get funded loans, to the disappointment and uproar of the small business community.
Yeah. And I think the next wave that we're going to have to really address, some of these business owners are getting loans now, but the forgiveness portion is confusing to say the least. I just wrote a 3,000 plus word piece about this for the NAV blog. And there are some real confusing points, even from the points of CPAs and attorneys who are studying this, that have to be disclosed, because business owners are making decisions right now about how they're going to use their PPP funds. And the decisions they make right now will impact whether they can have that balance forgiven in the future. So we're really hoping that SBA and Treasury will come out some clear guidelines and instructions for the forgiveness portion of the loan quickly, because it's a bit confusing to say the least.
For those fortunate to have received the loan, what is your advice for best practice for managing that money and being able to demonstrate to the SBA that the funds have been used for specific purposes, and where applicable, they're able to have that amount forgiven?
That's a great question. It's probably the most urgent question for anyone who has gotten an approval or still think there's still some approvals coming through. You really want to make sure that you document how you use the funds very carefully. If you have made any hiring changes, so you've laid off folks, you've had some folks take pay cuts, you're thinking about rehiring, I would really, really encourage you to, read what I've written, read some of the other articles about it, and then get with your accountant or attorney to figure out, what your approach is to maximize forgiveness. And again, that's especially true for someone who may have had changes in their headcount or employee wages or salaries or even tipped employees, because you want to make sure that you can demonstrate clearly that you use the majority of these funds for payroll purposes. And it's very specific. Just as an example, if let's say you're self-employed and you had a net profit of $150,000 in your business last year. Well, if you file Schedule C, which many, self-employed folks do, then the IRS is saying you're going to base it on your 2019 tax return net profit, line 31. You're going to take that and figure out your average monthly times 2.5. Very, very specific formula. And so you may have made a lot more money in January of this year or February. That doesn't matter. That's irrelevant. And then you generally need to spend at least 75% of the PPP funds that you get on payroll related costs. So that could be salaries. It could include certain group benefits like the group health insurance you pay your employees or retirement funds, et cetera. But it's very clearly spelled out what you can spend the funds on. But again, if you've changed headcount, that makes a big difference on how much gets forgiven. So you want to be able to track it. The most important thing you can do right now, if you've either received PPP funds or you anticipate you still will, or the program reopens, and they allocate more money to it, you apply in the second round, then you want good records. And you want to keep these in a place where you can find them, because right now you're thinking about it, it's on top of mind, but I can tell you 6 months from now, you're going to be trying to get your business, running again. You're going to have forgotten how you came to that. So make sure you keep really, really good records and talk to your accounting and a professional and legal advisor to make sure you're maximizing your opportunity for forgiveness.
I've heard some business owners and their advisors talking about setting up a new bank account where those funds can be deposited and then linking that to payroll so that it's automated and payroll's coming directly out of that account. Does that make sense to you?
I think that's a great idea. I don't disagree with that at all. The only thing would be, timing in terms of whether there's an interruption in certain bills that need to be paid. That could be confusing. So whether you set up a new bank account or not, make sure you're keeping track of how you spend the funds. Same with EIDL. There are specific ways you can use that money for working capital. You want to keep track of that, because eventually there will be audits of this program. How much they'll come back to individual small business owners, we don't know. But we do know that anytime these kinds of programs roll out very quickly, there's fraud involved, and the government will want to try to catch that and try to recoup that money if they can. And so you do want to keep really good records.
Coming up, we talk about why you should contact your elected officials, preparing for the possibility of Congress adding $250 billion for small business PPP loans, and other types of loans to consider. All that and more right after this short break. The show notes for this episode can be found at inspiredmoney.fm/138. If you're listening in your car or wherever you are, check the show notes if you want to learn more about Gerri, SBA loans, and other things mentioned in this episode. It's time for the Runnymede Money Tip of the Week. Normally, it's best to leave your retirement savings untouched so that your nest egg can grow until retirement. But we're not in normal times right now, so I want to go over retirement plan provisions buried in the $2 trillion CARES Act. In case you're in immediate need for cash, here's what you need to know. First, retirement plan hardship withdrawals and loans. Normally, if you withdraw money out of your employer-sponsored retirement plan or IRA account before 59 and a half, you'll be hit with taxes and a 10% penalty on that amount. The CARES Act waives the early distribution penalty on up to $100,000 of such distributions in 2020 for what the law calls affected individuals. And you'll be allowed to pay the taxes that are due on the distribution over a 3-year period. The definition of affected individual is quite broad. To qualify, you must have been diagnosed with COVID-19, have a spouse or dependent diagnosed with it, or experienced adverse financial consequences as a result of being quarantined, furloughed, or laid off. What else? If you've had your work hours reduced, are unable to work because you don't have childcare due to COVID-19, closing of or reduced hours at a business that you own or operate if you had COVID-19, or other factors as determined by the Treasury Secretary. As you can see, this is very broad, and that many people will qualify as an affected individual. You may also be entitled to a penalty-free retirement plan hardship withdrawal if you live in or work in a disaster area as declared by FEMA, the Federal Emergency Management Agency. The CARES Act also raises the amount that you can borrow against your 401k retirement plan within 6 months of the law's enactment to $100,000 or 100% of the account balance, whichever is less. Previously, the limit was $50,000 or 50% of the balance, whichever was less. And then loan repayments due before December 31st, 2020 can be suspended for a year. The second provision worth mentioning is the required minimum distribution waiver. Normally, if you turned 70 and a half in 2019, you must take your first required minimum distribution before April 1st of 2020. And then with an updated law change, if you turn 70 and a half in 2020 or later, you must take your first RMD by April 1st of the year after you reach 72. The CARES Act allows retirees to forego taking the RMD from IRAs or 401k type plans this year. This means that if you skip taking your RMD in 2020, you won't be subject to the 50% tax penalty normally levied by the IRS. This waiver includes any retirement account subject to RMDs, like IRAs, 401ks, Roth 401ks, and inherited accounts. There are some different rules that apply to inherited IRAs, so you should consult with your tax advisor to be certain. I suggest doing the same if you've taken your RMD already this year, because you might be able to recontribute the 2020 distribution. Now, I think that skipping an RMD in 2020 has several benefits. One, you keep more money tax sheltered and invested longer. Avoiding this withdrawal could keep your tax bill lower because the money that you would have taken out could have pushed you into a higher tax bracket. In conclusion, the CARES Act gives you additional flexibility, but just because you can take money out doesn't mean that you should. Unless you're in a dire circumstance, taking a withdrawal of any significant amount out of your retirement account can set you back in terms of being retirement ready. I suggest if you're considering taking money out early from your retirement plan, to consider this very carefully, including looking at other daily expenses that you might be able to reduce in order to stay invested. That's the Runnymede Money Tip of the Week. Inspired Money is brought to you by Runnymede Capital Management. We help you to plan, invest, and worry less. Do you have a financial question? Go to inspiredmoney.fm/Andy, that's ANDY, to email me directly. I'd love to hear from you. You're listening to Inspired Money. I'm Andy Wong.
Gerri, the language in the regulation kind of broad. I don't know what the language was specifically, but it's for those companies who need to continue business operations and payroll. It seems like in this environment that is just so drastic, everybody's affected, right? As far as companies applying, it's difficult to ascertain or distinguish who is in more need than others. And is that part of the application process?
Not exactly. So yes, you were exactly right. And they even acknowledge it in the CARES Act that, we anticipate that, most businesses, I can't remember the exact language, but you have to certify as a small business owner that economic uncertainty, I remember that language for sure, it basically necessitates you taking out this loan. And there was a line about it's the sense of Congress that, most businesses are experiencing economic uncertainty due to this or something to that effect. So it's a pretty broad language. And I think that's caused some frustration, certainly from some small business owners who are on the verge of shutting down, didn't get the money, but then there's other businesses who are saying, well, we're not sure what's going to happen. So we're going to go ahead and get this money because we don't know what's going to happen in the next 8 weeks and we can, so we will. So the lender themselves, they're really, as long as the borrower certifies that, it's not the lender's job to determine whether or not you truly have economic uncertainty. And I'll give you a quick example. My lender for my auto loan, you can, if you go on the website, they say they have a button where they say you can apply to skip a payment. And if you check that, then they'll ask you questions like, how has your income changed? How's your situation changed? How much, less do you have in income, et cetera, in an effort to determine whether, you've really been affected by this and you need to skip a payment on your auto loan. Well, that's not what this is about. There isn't that same calculation. Now on EIDL, they will be looking at the past and looking at the current to help figure out how much you can qualify for. But here it's 2.5 times your average monthly payroll for the last 12 months, or there's an alternative calculation for your seasonal business. So it's not a drop in payroll that has you qualify. It's really it's about maintaining your payroll. And so again, it's really important to understand that this program is focused on helping small business owners continue to pay their employees, which can include themselves, for the 8 weeks after they get the loan. That's what this program is really designed to do.
Is there anything that can automatically disqualify a business owner from receiving PPP?
Yes, there are several disqualifications, including some criminal records. I believe, off the top of my head, I didn't write this article, my colleague did, but I believe it's something related to if you default on a federal obligation recently. And then there are some business industries that can't qualify. For example, if you do more than 51% of your business is lobbying, for example, gambling, pyramid schemes, they call them in the language, et cetera. So there are some disqualifiers, but one that is not a disqualifier for this program is credit. And that's interesting because traditionally, SBA loans do require acceptable credit, and EIDL does. The disaster loan does require acceptable credit. They will check personal and even business credit on anything other than a sole proprietorship. And this loan falls under 7A, which normally will check something called a FICO SBSS score, which is a FICO score that incorporates personal credit plus business credit into one calculation. Normally, that's part of a SBA loan under the 7A program for $350,000 or less. But here, there's no mandatory credit check. So we haven't heard of any banks. Presumably, if you don't have a relationship with a lender and you're applying, they might check credit to verify verify your identity maybe to make sure that it's not a fraudulent application, completely fraudulent, but there's no requirement that you have good credit to get this loan.
Interesting. So, Gerri, where do we go from here? With the $350 billion already used, business owners are waiting to see if I know that there's talk about another $250 billion possibly to continue the program. But for now, no new applications are being accepted. If the $250 billion gets approved, will the backlog of existing applications just start processing again, or will there be a new application process?
Well, that would depend on what Congress decides to do in the next round. My anticipation would be they would just build on the program since the lenders have figured out what they need to do now and they've got the systems in place. And there are many lenders with a backlog of applications that they would still like to process through this program. So my anticipation would be that they would continue to process the applications that are already in the queue. And so we're telling business owners, hey, go ahead and get your application in the queue. Doesn't hurt, because if it opens up again, you at least want to have a place in line. You think how quickly this money is already gone. It'll go quickly in the next round too. So it's not a bad idea to be prepared. But the other thing that I'm telling small business owners is, this is the time to let your elected officials in Washington know what your business needs. They need to hear from small business owners because that feedback is going to hopefully help inform, some of the next decisions going forward. And we may need a wave, 3 and a wave 4 and whatever else. So don't be afraid to speak up. And if you have questions about the program as it stands, if you're eligible for forgiveness and your CPA is scratching your head about the question about the employee that you let go, but you brought back, but doesn't want to come back to work or whatever it may be, they need to hear this, because that has been a lot of the questions that I've heard recently are from employers who just can't quite navigate the side of employees that they may have laid off who may be staying home and not able to physically come into work, and then they're supposed to pay them, but maybe they're trying to collect unemployment. It's just it's a tricky situation.
Yeah, just anecdotally, many of the small businesses that I know, many of the business owners who I talk to, very few, if any, have actually received PPP funds. Do you anticipate any changes to the eligibility requirements for round 2? A lot of the small business owners are wondering if the second round how will it be more reflective of the small business community?
That's a really, really good question. I mean, what I'm hearing from small business owners are two things. One is many of them don't want to borrow money, right? They are very averse to taking on debt in this very uncertain environment. So many of them, for example, will apply for EIDL, but they'll only take whatever the grant portion offers them because they don't want a loan. So additional grant funding, I think, is something that many small business owners would really like to see happen. And then I would say the other component is one we touched on, which is the fact that this is very payroll oriented. But you can't, let me give you a quick example. I was on a call yesterday where there's someone whose business depends on a lot of independent contractors. And under PPP, you cannot include your independent contractors in your own payroll calculations. So you're only getting money for your payroll, which in this case, this business was her, but none of her independent contractors. But her business won't survive without them doing work, right? They're told by SBA and Treasury to apply on their own. So the independent contractor applies for PPP on their own. But there's no requirement that they go, once they get these PPP funds, they can pay themselves as allocated, but there's no requirement they go and do work for that company that they were working for, and the company they're working for needs the work. So how do they pay them? So there's this disconnect between the company that needs to pay the independent contractors to keep working, but then the independent contractor is applying on their own. Does that make sense?
It seems to make sense to me that the independent contractors have to apply on their own. Although looking at the way things have gone so far, that just adds that much more application demand on the banks and the SBA, which they already can't handle.
Yes. And often smaller dollar loan amounts, which are generally less attractive to banks when it comes to small business lending. Yes.
What's your advice for business owners now? I had mentioned earlier that a lot of the loans that had been funded, it looked like smaller regional banks had a lot more success, especially for smaller businesses on Main Street. Should they be going to the big bank now, or should they be seeking out a smaller bank?
Well, I have been encouraging business owners to check with the bank where they have a banking relationship. That's the easiest path if they are able to help them because they already meet certain requirements in terms of know your customer. You know, they know you're a business. They have already collected information to verify you're a business. It makes it a lot easier. So that would be the very first place that I would go. Beyond that, what I've seen from a lot of the smaller regional banks is they are prioritizing their existing customers because, again, they already know those customers and they want to maintain that relationship. So there are a number of small businesses out there who don't really fall into that category. You know, their bank isn't offering it, or their bank has other requirements they don't meet, like they already have to have a lending relationship, et cetera. And so those customers, that's where NAV is working, hopefully with more funding opened up to help match them to lenders. And a lot of them now are non-bank lenders who are able to offer these loans because the SBA did expand qualifications to offer these SBA loans. So hopefully we'll see some movement there. But start with your bank first. And then if you don't have success there, then, uncover all your options because you want to try to get into the line that's moving so that you can get the funds that you need.
Does NAV work with the biggest banks down to small regional banks? What do your banking relationships look like?
For our marketplace in general, yes, this program is much more specialized. So we have a variety of banks and non-bank lenders that we're working with for this program. And interestingly, I will tell you, we have gotten calls from very big banks who are saying, can you help? Do you have a place for our customer, for these applicants we can't help? Everybody's scrambling to try to, as quickly as possible, help as many small business owners as they can. And it's truly a massive rush for these funds.
My experience is that early on, Chase Bank was only accepting applications from customers who had current loans, who had a lending relationship. And then banks like Bank of America and Wells Fargo, they were eventually accepting applications, but it seemed slow. And many of their customers who had submitted applications still haven't heard anything back yet.
Yeah, and not to be too technical, but when this program opened up, every single application still had to go through the SBA's system called E-Tran. So you imagine this huge influx of 14 years worth of applications having to go down this narrow funnel to get an approval from the SBA. I mean, that's still, because the SBA has to keep track of how many funds have been approved, right? There is a limited amount. So it wasn't like you get this amount and you get this amount. It still had to funnel through the SBA. So they've done some things to try to increase that capacity, but the SBA wasn't set up for, the volume that we're talking about, whether you're talking about the disaster loan or PPP. This has challenged its systems tremendously.
I think based on the volume of applications that were submitted and loans that were fulfilled, it appears that the big banks, they look ready now. I think that they have electronic ways to submit to E-Trans, and that has become streamlined. So it's a big question mark because now it's like for round 2, if someone has not submitted yet, should they go to the big bank where maybe things are streamlined now? Or do they continue going to the smaller banks that had success previously and may not have the backlog that the big banks have?
Yeah, it's a huge, huge question, Andy, right? Like trying to figure out where do you go? And again, I keep saying, start with your own bank. And that's one of the problems we're trying to work to solve at NAV is figuring out, okay, where's the lanes? Like which lane is open for this particular applicant based on where they live, geography-wise, based on the loan amount size. Because some lenders have a certain loan amount size, some have a geographic preference, some have a industry preference. I mean, there's other factors. It's like any SBA loan. What I've been telling business owners for years is just because one bank can't give you an SBA loan doesn't mean any bank can't. Now, unless you have a disqualifier where you absolutely cannot qualify, lenders are allowed to add their own criteria as long as they don't discriminate on a prohibited basis. They can add their own criteria. So that's always been a challenge for business owners to figure out, what the right fit is for their small business loan, and that's why NAV was created in the first place, was to try to use technology to help solve that problem. And of course, now we're just trying to do that on a hugely accelerated pace, and it's definitely challenging.
In terms of geography, does NAV work with customers in all 50 states?
Yes, we do. Now, lending partners may have restrictions, right? So the lender may have its restrictions, but we have customers all over the U.S. You do need to be in the U.S. to use NAV right now. And most of our customers the 1.5 million that we work with now came because they could get their business credit for free, personal credit information, and then our marketplace that helps match them to lenders. So,
and then for the PPP loans, it looks like certain states had higher approval rates. In some cases, those that have not been impacted as hard by coronavirus, like New York or Massachusetts. Do you have any insights into that?
A report just came out from the SBA today that I have not had a chance to delve into. So I haven't had a chance to really take a look at what the impact has been, state by state, and how that corresponds to stay in place orders or other restrictions that might indicate. But I think that, that business needs it more than another. But I think the ultimate lesson for this is that business owners are going to have to navigate this quickly, whether they feel adequately prepared or not, which is unfortunate. But I think when the next round opens up, there's going to be a lot of demand for that, of course, too.
That's for sure. There are a lot of small businesses who wanted it the first round. I know many who actually had applied the day that it opened that morning, and they still can't figure out why they haven't heard back, haven't had their loan application reviewed and funded. As business owners wait, what else can they be doing in terms of looking for loans? I saw that on your website, you talk about a Kiva 0% interest rate loan.
Yeah. So the one little bright spot that I would say in all this has still been crowdfunding. And there are platforms that I know most of us think of, like GoFundMe if someone has a medical emergency, but there are a number of platforms dedicated to small business lending. Kiva is one of them. So Kiva is nonprofit. They have a 0% interest loan with no fees. And they've been around for years. I've talked about them often in other presentations. They're microloans. So for this disaster, they've opened the platform up to $10,000. But the way it works is you get a few backers, friends, family, loyal fans, maybe your Facebook fans, your fans on social media, and you get a few backers for about $25, $15 to $25, I think is the initial contribution. And then they open it up to the platform. And if you're able to get the support from other lenders, then you get a 0% loan. And Kiva changed it for this crisis to where it's up to $10,000. It's easier to qualify, and there's no payments. I believe it's for the first 6 months after you get the loan. So that's one option. But there are other crowdfunding platforms out there. GoFundMe is helping with business platforms. There's, WeFund and Seed Invest, I think, are also doing some special things for businesses looking to crowdfund. So especially if you have a loyal audience or loyal customer base, I would encourage you to look into that and see if that might be an option for you. Your customers who have not yet been significantly financially impacted may welcome the opportunity to help your business survive through this through a crowdfunding effort.
So your favorite neighborhood pizzeria might be able to be saved by its customers.
Yeah, exactly.
Are there other programs or things that business owners should be aware of?
Yeah, there are state programs out there. So now some of these have already run out of funds, but I keep seeing new ones pop up. So I would definitely recommend you sign up for your emails from your SCORE chapter. So SCORE is the Nonprofit Business Mentors, and Small Business Development Centers, SBDC, your Small Business Development Center, because a lot of them are doing a really good job of staying in touch with small businesses in their state. And so a new program comes out, they announce it. And they will also often do office hours and training for those who are still in the future, hopefully again, will apply for PPP or EIDL. So they can be a great resource, and that service is free.
Well, thank you, Gerri. Thanks for all the information. Where can people find more about NAV in your writings and more about you?
Yeah, so on the NAV blog, NAV as in Victor.com, nav.com/blog. We also have a COVID resource center. So we're writing every day about these topics. We hear frequent questions from customers. We try to write an informative article to help them. And then we're updating that information as new guidance becomes available from the SBA. So we're trying to stay on top of it and educate and inform small business owners as best we can.
Well, things are changing minute by minute. Thank you so much for sharing this information, talking fast and covering a lot.
I definitely get passionate about it. So
thank you so much, Gerri.
Great talking with you. Thank you.
So what was your favorite inspired money moment? I'm actually not going to single out a favorite moment this week. I thought that I was very familiar with the SBA loan programs, but I learned something today, and I hope that you did too. Do you have more questions or have questions that were not answered today? If you do, please let me know by emailing me at firm@runnymede.com. That's FIRM@RUNNYMEDE.com. I'm happy to answer your question or forward it to somebody who can. Please share this episode with someone that you think it'll help, and consider reviewing this episode at podchaser.com. Podchaser's Review for Good program has been extended through April 30th. For every podcast review that you write at podchaser.com, the company will make a donation to Meals on Wheels America's COVID-19 Response Fund. Even better, my media host, Libsyn, has committed to matching donations. If you've seen people lined up for food in these crazy times, you know that this is a great cause. It'll just require you to take a few minutes to write a podcast or episode review. Please go do it. You'll make my day, and what a great way for us to make a positive impact together. Thank you for joining me. If you're not yet subscribed, please go do it now so that you won't miss next week's show. I look forward to seeing you then. The music you're listening to right now and all other music on today's show is by the amazing Jim Kimo West. Have an inspired week and do something that scares you, because that's where the magic happens.